Well, that's the shopping trip. Let's get some analysis with Nina Skero, the Chief Executive of the Centre for Economics and Business Research. Nina, good to see you. So good news then that consumer inflation is coming down and prices rising less steeply than before. But help us here, core inflation is still the same. So what's going on?
A lot of the drop in the headline rate of inflation is explained by the single element of energy. So really, regardless of what's been happening on the monetary policy front, we would have seen this drop. But what's more concerning, as you say, is what's happening in core inflation and services inflation, because it's really those measures that are telltale signs of how sticky these price increases are and how quickly the inflation will continue falling after these very high energy prices work themselves out of the inflation figures.
Britain seems to be suffering the worst inflationary spiral of all of the G7 group of countries. Why isn't the UK winning the battle on inflation?
There isn't one single answer in terms of what differentiates the UK and other countries. The comparison to the US probably isn't really comparing apples to apples. The U.S. had probably an easier battle against inflation, given that they weren't as exposed to the shock in energy prices and to the Russia-Ukraine conflict. And also, the Fed in the U.S. started hiking interest rates earlier on, which I think with the benefit on hindsight was the right thing to do. In terms of comparing the UK to European economies, some of it does come down to what governments did in terms of intervening to shield consumers and businesses from rising energy costs. And then there are also unique dynamics in the UK labor market, which has seen wages in the UK rising quite sharply. And I think that's feeding into inflation as well.
OK, so you're sitting in the Bank of England reading the tea leaves. Are more rate hikes inevitable?
They're almost inevitable. We've had two major data releases this week so far. So we had the inflation figures, which, again, it won't really be a relief at all to the Bank of England. The headline rate has dropped. Again, that's largely due to what's happening to energy prices and not really a result of their monetary policy. And then also yesterday we had data on the labor market, which showed some signs of cooling, but still a relatively robust labor market. So that the combination of those two factors, signs of stickiness in higher prices and a still relatively strong labor market, will mean that there is a very, very high chance of at least another 25 basis point hike in the bank rate. And I would say probably actually another hike after that, which would see rates peaking at 5.75%.
Nina, good to see you. Thanks for your analysis. Nina Skero, Chief Executive at the Centre for Economics and Business Research.